Hello guys, welcome to the Train Parrot. Thanks to general markets putting new all-time highs, Bitcoin managed to defend the breakout on the daily time frame, as you can see in here, and on the 4-hour retest that we were seeing later last night. But we continue to see how it develops these sketchy moves on the order book that I really want to make you aware in case you haven't watched the videos on Thursday or Friday. We'll look into this dark area in here as opposed to what we've been seeing in the past 2 weeks. And of course, I'm gonna cover the implications of the Friday close on general markets for the volatility index, gold, dollar index, NASDAQ, S&P, and in general, the major stocks as well. If we were able to defend our position over the weekend on the weekly time frame, we could potentially update the colors of my Bitcoin status summary, and that could be huge. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And if you haven't noticed, I've been putting out dedicated videos for altcoins. And as you can see, XRP Army is absolutely smashed this week with just 500 views after almost 24 hours. It's just crazy. That's the worst performing altcoin video we have so far. If you want to defend our position and continue delivering this sort of videos, including new altcoins, the best we can do is to keep hitting the like and writing down comments below. The Parrot Army is damn angry about the situation. We need to get this channel to 10,000 views per video minimum and kick out all the other channels that are completely selling bullshit to people. The more the channel grows, the more alpha I'm gonna drop in the public videos. That is as simple as it gets. Bitcoin price pattern with 78% accuracy emerged, pointing to new Bitcoin highs. Let's see what these silly people are thinking. A Bitcoin price pattern with a high hit rate form on the daily chart. Are new BTC all-time highs incoming? Let's have a look, because this is the most viewed article at the moment in Cointelegraph. Hottest articles like this are my attention. That is the way we understand what retail is currently thinking. Since 2021, 78% of Bitcoin bullish engulfing patterns have led to new local highs, especially with broader uptrends. Bitcoin has absorbed over 544 billion in capital since November 2022, pushing the realized market cap to 944 billion. We can see in here the green engulfing candle that has followed through with 3, we could say almost 4 green candles right after that. There are some rules that are highlighted in here. For example, that the engulfing candle must encompass at least the previous 2 candles. In this case, I think it's almost 3 of them or 4. The pattern should emerge at the tail end of a corrective phase, indicating a potential trend reversal. In the session following the engulfing pattern, a clear break of structure should be observed to confirm bullish momentum. Let's remember that all this move in here, we were clearly observing that the orange position sizes were responsible for the move up. You can see in here the orange pointing up, and the purple wells and the brown wells were going down or sideways, so they were responsible. It's funny, but it seems to be that retail was responsible for that, and that was confirmed by CryptoQuant in this area in here. Throughout this whole period, we see the retail orders in red. Here we have a chart showing every time that green engulfing candle has appeared in the recent price action. It seems to be pretty successful, to be honest, if they are calculating it properly. Of course, my magnifier glass doesn't allow me fully to see if it's checking all the boxes. Remember that green engulfing candle needs to encompass the previous 2 at least red candles. Probably that's not the case for every single scenario in here, but so far it looks pretty impressive. And I am considering to opening to the public the TTP agent, where you can literally have a chat with any of my videos. For example, GB is saying here, what video in the last week did you mention market manipulation? I didn't even remember about that. And you can get an answer. You can ask literally anything. What were the latest news about Aave? And you get everything that I mentioned in the past, and you can click directly in the links and go straight to the point in the video where I'm actually saying that. Ethereum daily transactions just hit its highest level since January 2024. Will price follow? So the daily active addresses from 345 to 593. What I'm missing in here is what is the typical value in a bull market, because doing a 50% from being crap just to being double crap doesn't make much of a difference. let's say we had millions in the previous cycle. For example, in 2024, we have 1.7 million. So we are getting less than half of that still, just to be very clear. Next week, we have incoming the unemployment rate. That is around Thursday. I think on Tuesday, we also have a bunch of things coming in. And the Federal Reserve reduced their balance sheet a little bit, but global M2 continues to go higher. And in China, injections have put a local high here at 114K and is still on its way to settle in that direction. So the two down below are good news, but of course the balance sheet reducing in this area doesn't necessarily help increasing the liquidity, neither pointing towards a quantitative easing scenario. But it's not a big deal, it's just a small push down. We are still in the flag on the trajectory to the upside. In terms of aggregated open interest, as you can see, I have settled the line in this shape. So we are still in the territory of the breakdown of open interest aggregated at a value as of now of $32.8 billion. We were about to break out in this area and potentially get a relief rally, a revenge rally into $35-36 billion of aggregated open interest, but that is not yet the case. We could still do it, so I could keep my eyes on this and continue to update you. Of course, that can have massive implications for a rally that maybe can turn also into just a relief rally or maybe into something more. June is sitting at 2.67%, still in the green. That will be the third month in the green. If we look at past years where we have done that, or even more, in here we have 5 months in the green being in June. Let's see how many times in July we turn into red. Well, we have just here, as far as I can see, just one example in 2016. 2021 being the equivalent year is precisely upside down. We have 3 months in the red. Let's go into CME. Let's do a wrap up of where we are with the current CME gap immediately below the price, and let's also summarize how many CME gaps we have below so far. We have this one at 106.5, but on Binance that is 106 flat, and if we go lower, we're gonna find one CME gap at 99.5, one at 97.3, one at 92.4, and we have a fifth one located at 54.100, and yes, we have a sixth one at 21K. So you could argue that they don't really work, but we have 6 out of possibly hundreds of CME gaps that get filled every single day, every single week. We are in a rare situation, if you ask my opinion. 6 CME gaps still open makes a little bit beyond what is the typical median of keeping just 2 or 3. We are currently in a bull flag, as you can see in the 1 hour, and I'm really surprised that with all these lower lows that we're putting, we still don't go and take the 106, particularly because when we are gonna look now into the bid-ask ratios charts that are the ones that are calling my attention the most among all the charts, we don't have any support. Literally, we have the least support in months, and still we're just making a humble move down. We have to mention as well, we just started the weekend and the closing price is this one there. I'm not gonna take this one because I already know that the last candle doesn't count, and on Binance that is 106.753. So if we were to pump over the weekend, anywhere we go beyond 106.8, we're gonna build a 7th CME gap below the price. Now here is the interesting bit. If we were to go below 106 over the weekend, we could be creating a CME gap above the price. Let's say we go, hypothetically speaking, into 102. That creates a new gap between this and this that adds up into the motivation for price to go higher. But then we get this 106 to also contribute still, because that is not gonna be filled over the weekend. These orders that are placed in CME that haven't been able to be filled, that is what contributes to go into the first CME gap, are not gonna get filled over the weekend because CME is closed. Therefore, we're gonna get a 1 and a 2 gap if we go lower, both contributing for the price to go higher into 106. So we could say that that could turn into some sort of double insurance to go higher. Definitely an interesting weekend. We can also say that it's really bullish to close this high. That is pretty much 107 insurance right there in case we go any lower. But if you focus in the chart in the previous areas in here, we also been this high or even higher over a weekend in this recent price action too. So it is bullish, but it's not enough by itself to save our neck if something hits the fan over the weekend. And yes, I have updated the Bitcoin status as you can see in here. Second bullish breakout. Yeah, we have that on the 4-hour. RSI range top at 75 still not hit, and we are retesting the breakout going back into 50s. CPR pivots were reclaimed, true, above the top anchor VWAP, true, that is actually very bullish. CME gap at 106, let's remember that. And daily we have been testing the range highs at 107.4. The RSI breakout on the daily is still intact, no fake out whatsoever. Yeah, recently we did a lower low and a higher high is still not possible. This week we produced a hash ribbon new capitulation signal, which we're gonna look in just a second, and the MACD bullish cross is confirmed, and it occurred a couple of days ago around the zero line in the histogram. The weekly, I'm about to turn it into green, assuming that we close like this and we are in the context of Cerberus printing a sell. We still have the stochastic RSI with a bear cross. Both of them are saying we are going into the bull market support band, but if this week we close with this green engulfing candle on the weekly reclaiming the previous lost support, that is really bullish. So we are gonna have an interesting battle of signals on the weekly time frame. The monthly remains bullish because nothing is really broken unless we close below 102.5. So let's see the 4-hour time frame in here, and you can see that the price is hovering around the 107. You cannot see it in here. We will look into that in just a second, but we have tons of selling wall right there above the price. Very little volume over the weekend. Of course, we're gonna see a version of that reduce in sizes of orders because most of the people close their orders during the weekend. Our yellow support now is at 50 if we are realistic on where we could be meeting that, if we meet it ever. That is 50.82, which we already have in the reverse RSI, and at the top we have 74.39. By the way, if you want to access my charts or my indicators, have a look at the shop on my Patreon link down below. You can access them from Telegram, or you can get access directly to the Pine scripts. If you're not convinced on any of my posts on Telegram, you click TTP charts and you get to use a little bit of them for free to see if you actually like the experience. I love to be able on Telegram to just select any of my charts and immediately to see the real-time look of it, including all the annotations. As soon as I make them, you hit in the menu and you get any of them up to date. That really supports the channel. As long as I can pay the salaries, I have more fresh mind to focus on the alpha itself. So I really appreciate if you can support my team. I really like that we are having a reaction against the yellow line in here on the 4-hour, to be fully honest, and that we are doing a reset so we can have some chances to get into 74.39. That is at the moment at 110.6. Our support in the price is today 106.6. More or less that is meeting with the anchor VWAP to the all-time high. We are a couple of days away from closing the CPR level, so let's do a little bit of update on that. I'm not sure I'm gonna be able to put a Sunday alpha, so you can consider this video the fat core alpha of the weekend. So our pivots are at 104. We have been above, we have been below. We haven't tested any resistance or support this month. That makes it really annoying because typically what we do is we infer what's gonna happen the next month based on what's happening right now. All I can say is that because of that, probably we're gonna have to expect next month to see support and resistance to be a bit squashed, which is definitely gonna call for volatility. Staying in a range creates a case for additional volatility each month. Last month we touched resistance, so we were expected to touch resistance this month at 113.500. There is 2 days to do that. We have a target from this triangle in here into 111.800. We have done 2/3 of that target so far, but if we fall short with that target to get into the actual first resistance. On the daily, we are defending the breakout on the RSI. That is bullish, as I mentioned in the Bitcoin status slide, which you can access from my Patreon community if you join. The volume profile shows us that there is an ongoing battle to exit from the top of the range. As you can see in here, it's the 4th day that we tried to do so. If we do it over the weekend, of course, we are going to create CME gaps and more attraction to go lower with a 7 gap. If we see a rejection, we leave some sort of mark at this range to attract the price to continue doing so. This yellow line in here is the support, but I think I need to drop it lower in case we come back for a retest at 48.41. So that 48.41 in here, the 38 is correct, the 25 is also correct. The 85 remains at the top of the range, so let's look at those prices in the chart. So the 85, you can get there, gives a whopping 137k. The first support that we need to defend is more or less 105k on the daily. Next support is 100,500. If we see a complete rejection of the top of the volume range, we have the last support at 89,300. This slippery point of control in this area that we haven't been able to test, along with the anchor VWAP to the bottom of the range, is sitting at around 96 to 97, and I'm always wondering if we cannot manage to break out that 107.5 if we are ever gonna meet there. And judging just this sequence of lower lows with this low, that low, and that low, if we fail in here, the next low is literally the point of control. If we continue putting lower lows, of course. If we don't and we defend, let's say 105, 104, that is pretty bullish because it will be the first time that we don't have a lower low within this whole range. And ideally we do so without producing a fake out of this breakout, right? So going into that 48.41 at 104.9 is the most bullish retracement that we can wish for. When it comes to the MACD, we managed to confirm a couple of days ago the bullish cross in the middle, right there at the zero line, which is not the most quality signal, but it's better that continue to bleed below the zero line, of course. And as I say, on the weekly, we have a battle of signals. We have the sell from Cerberus, we have the stochastic RSI bear cross on the bearish side, of course, but we are about to put a green engulfing candle on the weekly, right after 7 weekly green candles in a healthy uptrend that is being defended. Here are all the green candles, and in history, that is really bullish. There's usually a little bit of drawdown and then continuation. But yeah, we have that bearish cross on the stochastic and the Cerberus sell right there. The last sell in here allowed the price to even put a higher high, but still Cerberus reset at this point with a warning buy. At that point, it was saying look for buys, and the season of looking for buy ended around here. So within that range, you should have searched for a buy, and that's what we are gonna do if we ever get that move lower. Same as we did in the megaphone pattern in 2024, where we spent all this period looking for longs, and that paid off pretty well with a move from the lows 120% up. So in a bull market, I use the sell in a different way, as you can see. And yeah, if we close like this, this is pretty bullish on the weekly. If by Sunday, on the bearish case, we were to close below 104.4, that looks like an ugly rejection that is telling us we're going into the bull market support band. And you have to put the different time frames in perspective, right? This is what the weekly is saying. I'm not contradicting myself. There are multiple time frames. You need to learn to walk and chew gum to be able to trade with multiple time frames in a good perspective, so you can make up the whole narrative, right? And even so, leave room and be flexible for things to prove you wrong in different aspects and react accordingly. And that's why 99% of the people end up losing. So let's say we get pushed below 104.4, we will leave a week up and we will say, okay, we should be heading into this. But then we have a CME gap at 107. Oh yeah, but you just say that, so we are going up. Are we going up or are we going lower? Please, Terrain Parrot, just tell me one single direction. And here's the answer. I won't, because there can be multiple directions in different time frames. On the weekly, we can be right by saying we are going into the bull market support band in that case. Yeah, but how can we get there and not visit the CME gap? Well, we can still, from a close of 104.4, make a last move up to liquidate late shorts, close the gap by Tuesday at 107, and still see a rejection and a directional move into the bull market support band. I'm not saying that that is what must happen. I'm just saying open your mind for flexibility of multiple time frames, being pleased with every single checkbox. If you can make a story that meets those needs, you are on your way of understanding multiple time frames time trading. And as I mentioned, the monthly chart looks very happy in here, so I'm gonna keep it in the green. And the yearly, which we haven't covered in a while, you know, the typical 3 candles in green every cycle, 3 candles, well, in this case there's 4, 3, 3, and this crazy trend, which is kind of flipping things, right? So initially the last year was the most intense. We can also say about 2017 cycle, the topping year, the most intense. Then we flip into having this 2020 year being the most bullish one, and the last one being very disappointed. That is because everybody was expecting there a blow of top. No blow of top, looks like this. You went into 69 and you closed the year at around 45. Pretty disappointing. And this particular cycle, if that was the new trend, we can go as high as we want, but there is a trend that says that topping year is becoming less and less of a thing in terms of the closing price. So personally, I am open for new highs. I am open even to go whatever, 140. Yeah, that's possible. That's actually even likely according to multiple technicals, but you need to start thinking what could be the close of the year and just try to spot the pattern. In my opinion, there is a pattern for a shittier closing price on the topping year, and it took so long to get some green in here. So I'm even tempted to say that maybe, just maybe, we could end 2025 with a red yearly candle. Let me know what you think in the comments. That doesn't mean that we cannot go to 140. We can. And I'm gonna go now into order book. Then we're gonna go into general markets. And to close the chapter, I'm gonna go into ratios charts for Bitcoin against the most important assets that we should be doing ratios, which is the VIX, the dollar index, the gold, NASDAQ, and let's see how overheated we are at the moment, or if we are due for additional upside. Each one of them is sharing different things, and make sure you look at the timestamps in the description before you start typing too long the video. You can watch one thing today, another thing tomorrow. Consider this video multiple videos. Leverage squeeze. What I care about this area in here is if we have too many longs, and on leverage squeeze is showing 62. We are above the median, halfway through towards the top. So this is not an area that I feel comfortable entering in a new long. In fact, I feel more comfortable entering in a new short with this ratio. Throughout the week, we have multiple leverage squeeze sales signals. Those are low quality relative to the signal number 2. If you missed the videos in the week, you are now informed. SOPR within this range in here, if you can tell where we are kind of at the top of the range, right? So that means that we have as many people taking profits in the green as we had in this green candle right there. Not as much as in this green or red candle there, but kind of in between this and that. And that is not necessarily something that must put a local top, but definitely is on that side. It's not on the side of panic sellers. There are no panic sellers in here, of course, because we are at high. So definitely there is people in profit and they're closing their positions. That's why we have slowed down. That's what the SOPR is telling us. Do I like to enter in a long at a time where people have been taking profits when the price just goes sideways? That's not my alpha. I like from this indicator to enter where people are selling at a loss. So all this range in here where people selling at a loss, so you have all this time to enter in a long. As soon as the SOPR started going up, you act contrarian. You start looking for an exit, at least from the point of view of a swing trade. And yeah, this week we have the capitulation signal. We are in the middle of a capitulation. You can see that the hash rate, it's a little bit oscillating like crazy in this range. We put a very intense low in here. It hasn't been that low since around February. The hash rate, definitely miners in a good proportion were forced to close down some of their machines, at least for a few days. Then we increased into 992 million and we came back down to 700. So something is going on, and I've been reading about the miners from different sources, and they were talking about that recently they have the lowest payoff, one of the lowest in the cycle. So that means that for keeping their machines on so you can experience the Bitcoin network, they are being paid the least. and that usually leads to them having to sell their Bitcoin to compensate for not being paid enough to keep the electricity bills in place. Glassnode at least was saying that so far they haven't transferred any of their wallets into exchanges to distribute. Of course, the problem with the hash rate load, it implies that the stress continues, so hopefully we get a buy signal as soon as possible. If we delay too long the capitulation, eventually they need to sell a little bit to switch back on those machines and to continue operating, and that tends to put a local top in the price. Although this week we had a little bit of a slowdown in accumulation from long-term holders, as you can see in here is rolling over. Interestingly, on the ETF spot, it was a really intense buying week. Pretty much every single day was really impressive, and we are at all-time highs of total cumulative flows. We are sitting in grid at 65. This week we peak at 74, almost extreme grid, but not yet there. Let's go into the order book and liquidity pools. We continue to have the largest liquidity pools above the price, both on short-term and long-term, which in theory should attract the price to liquidate those massive chunks. But when we get into the bid-ask ratio, you're gonna see how much they are actually defending their position, which could actually contribute to make it worse. Bid-ask ratio are orders that are not yet filled, orders located around this area defending that the price doesn't go there. If they get filled and the price continues to go higher, that could produce potentially a short squeeze. A short squeeze, as you can see in here, the liquidity pools increase as we get into 113. If we get there, I speculate that we could even get into 115 or more. Ideally, we don't do that over the weekend, leaving gaps below the price. Personally, I prefer to continue the uptrend and not to produce a blow off top at 115. On the longer term, we continue to see this forecast that I was preparing on our way down. I say if we complete the double top, I think that there is a higher chance that we produce a liquidity hunting here. So far, that scenario is in play. We have moved up around 10% and we need an additional 5% really to get into the largest pool of all the price range of Bitcoin. There's nothing that comes even close in here. Interestingly, CoinGlass is actually on the opposite opinion. I see here a spread away kind of chunk that ends at around 116 that is consistent with trading different, but interestingly it's flagging 83 as a larger pool. I'm using the 6 months as you can see there. If we were to go there and disappoint everybody with the expectation of the bull flag that is pointing into 140, that's definitely gonna cause a massive panic attack in the whole crypto space. I am still holding my short. Of course it's a small short, so I sleep like a baby. I am still targeting the low 100Ks, and if I got lucky and I went lower, even better. If we break out, I have plenty to add on in here and prepare for a massive size short position that I would love to ride into the bear market. So far, no changes in that. I've been talking on Patreon about how I'm planning to defend my position if we go slightly lower, to place a stop loss. If you want to know all that detail, join my Patreon for $10 a month plus taxes. Of course, people will complain about the taxes. That's crazy. By doing so, you are definitely supporting my team, helping me to edit these videos and all of that, so I don't have to and I can focus on the alpha. It's a win-win. Let's look at the past 30 days. I'm curious how this is developing, so let's refresh it. Yeah, still 109 is the king. I will say follow on the second place with 103, and maybe fourth place we have an equal win of 111 versus 106. 106 has the CME gap and has a little bit of fair value gap left over in there. There hasn't been major liquidation levels in the past days, and I'm expecting some squeeze at some point. Funding rates are kind of half positive, half negative across all the exchanges, but overall in average they are a little bit in the positive now. The order book on FAR charts shows us that there is resistance more than support at the moment. Purple whales are going just sideways. Everybody's just going sideways. After all, it's just a weekend. Let me magnify it so you can see it. These are the size of the positions. I don't expect to see a lot of activity in the order book in the weekend. A couple of weeks ago though, we have very heavy activity on the weekend. That was unprecedented, but it's one out of, let's say, 50 weekends that you see that. We are in this very heavy area traded, as you can see in the volume profile. If lost, that points towards the 105 support that we talk about on the daily time frame. And the bid versus ask, you can see that is a lot of resistance above the price. price, you can see the levels there, and you can also see them right here, 107.8, 108.9. Those are the two biggest chunks that are defending the upside. And on the lower end, you can see how thin is the order book. Even if we go into 104, not much interest in defending the price apart from 107. There's been an increase in aggressive buyers, which is actually positive. We could say if we connect a line in here, which I still cannot do on Market Monkey Terminal, but if I could, I will put a line in here and say that the aggressive buyers are kind of breaking out. Right, let's get serious and let's look at high block capital. Here is the thing, very sketchy activity in this area. There is tons of ask liquidity, limit orders right here, 5% up from the price. So all the way to 113, there is a massive selling wall relative to what we have 5% below the price. So relative to this support, definitely the top end is on a ratio that is decently sized. How big? Well, focus on this red, which is where every time that we have had more than 0.15, and you can find it at different levels where they are starting to defend the move up. Remember, 5% up is more or less that, and it kind of won the arm wrestling in the short term. Eventually, it broke the uptrend and it pushed the price down. So this is what we are having very early. You can also have it early, like in the beginning in here, that pushes the price down 8%, but then it continues. So it usually stops the uptrend, but if you are in banana zone, that is just a small pullback and continuation. If you are sideways or about to top, it ends up printing the top. So this is calling my attention definitely, not just because of that 5%, but it is actually across the board. All different deviations of ratios of bid versus ask are showing no interest. Shorting at 5%, shorting at 2%, at 1 and at 10. There is no defense of longs and price still remains there. There are no longs. 34 is extremely low too. That typically is a local top. Let's magnify this. Every time this is in red, it means that there are very little longs. Longs are pulling out and that slows down the uptrend or puts a local top. Call it selling pressure. This red in here is the funding rates when they turn negative. That is an alpha for a long, and now we are back in the positive. So every time we hit a high in this trading range, the funding rates go back in positive. That means that longs are dominating and then they push the price to a new low. So it is a tricky price action that is going on in here. Of course, on the weekend there is low volume, so we cannot really trust anything, but it's been the case before the weekend, starting from around the 24th. That's 4 days ago already that we are having this behavior in the order book, and you can see that the trend is to get darker in the bid versus ask ratio across all different deviations away from the price. We have 442k in liquidations below the price, very close to the price, of course, more or less around what you see in here in the chart, showing that there is more liquidations below the price compared to above the price. That, as I say, is an interesting take because apparently it's all above the price, so there is a conflict there between the two platforms. In terms of fair value gaps, we continue to have these two dudes that we refer throughout the whole week and we still cannot take. Remember that if we go for them, we kind of break this breakout, we fake it out, and retail traders are gonna get disappointed, although I think going there is not necessarily the end of the world. The fair value gap at 106 is almost gone. There is just probably a few dollars left to take. We have been printing lower lows and doing a great job at taking it, but still not closing the CME gap. Above the price, there is no motivation coming from fair value gaps at the moment, so anywhere we go up, we're gonna create new fair value gaps behind. Let's do general markets and then we're gonna go for the ratio charts. This is a weekend alpha. Timestamps are down below if you want to skip to anything. Let's start with the VIX. We close pinching the support. Really surprises me that to see at this point in time. I was expecting an expansion in the market. The pinch is very insignificant. It can be reclaimed easily, but of course, if we continue next week in this trend, that is a trend where we could be seeing NASDAQ and S&P to continue to put new all-time highs. If we reclaim this, that depending on how is the reclaim, of course, if we do something like this, then the NASDAQ probably is going to lose the breakout and it's going to come back down and produce a fake out. So very important to continue monitoring this, particularly if you are in the money already from the lows on the NASDAQ, S&P, where we were calling for reversals, and not now. I wouldn't enter now in a position long during a breakout that could fail. So as you can see, we did the unthinkable. The NASDAQ and S&P did a weekly breakout breakout from here. After multiple weeks of attempting this, finally it found the strength to do it. Now what we need to do is defend the breakout. So we need a follow-up on this, ideally a test, and if we don't get a test, new highs, new green candles, confirming everything. Let's look at the volume in here though. We had that breakout, we had the breakout on the momentum. Those two are extremely happy. This is an engulfing green candle, beautiful. Take a picture of it, make a poster, make a t-shirt, do whatever you want, but the volume is below the average. So if next week we don't continue in this direction and we don't put any significant weekly volume candle down here in the green, we are gonna have to say that the volume is not confirming the breakout. Indeed, the volume peaked at the lows, confirming the breakdown, and when we went back up and we put a new high, the volume is saying, no, that doesn't impress me really. That's kind of what the volume is saying. Can we do a successful breakout and follow up to the upside without volume? Yes, we can. That's the ugly truth. Is that good? No. It puts a question mark right next to your recent achievement. The good thing is that the S&P is actually happy in every single angle. It put the high, green engulfing candle, and volume reached the average. Impressive? No. Just enough to tick the box for the algos. Notice that the NASDAQ has broken out both from the global resistance and it has reclaimed the ascending trend line. The S&P has broken out from the global resistance, but now it's gonna have that RSI 70 as a revenge rally because the global breakout is happening from below the ascending trend line. So the question is, what's gonna happen when we reach 70 and what price is that? So let's bring in 70. That is 662, and I'm gonna leave a mark there for a target in case we manage to get into that particular level. Of course, that is an all-time high. Let's see if S&P can do the same as NASDAQ and also reclaim this line and carry on to new highs of momentum over 78, because that will be really crazy. Most of the stocks have done impressive things. You can see Google in here putting a green candle above the 21 weekly, which is very positive. Apple is still rolling over, barely defending the $200 mark. In my opinion, this is a bear flag. I don't know what's going on. I think there is a little bit of disappointment of recent releases. There's some backslash as well from the European Commission. So there is a lot going on with Apple. I'm not really liking that Apple is not fully on board with the AI narrative, not really achieving impressive things, but actually struggling a lot and bullshitting a lot around the AI domain. NVIDIA put a new all-time high this week. That is very impressive, and I deserve a slap because I managed to call the move. I called the move of 53%, but we did a 43%. So you're welcome to leave the slap in the comment. Amazon has reclaimed the neckline, so it's also extremely happy. I think after all the achievements that we have this week primarily are driven by big tech. And that's why the NASDAQ was the first one to put the all-time high. S&P kind of followed through, dragged by this big tech that were already making the big moves. If we put this in performance weekly, you're gonna see that there is a lot of tech in the green on the weekly close. Tesla is a little bit disappointing in this area. It's not following through with the rest of the tech is seeing resistance at 349, and I'm hoping that this recent move in here is not gonna turn into a dead cat bounce because it's getting really shy to actually enter the golden pocket. We try 1, 2, 3, and this is the 4th time that we try to enter the golden pocket to prove that the move is not just a dead cat bounce. But so far it has had some rejection. The rejections haven't been a disaster because we are still above the 21 weekly. And Palantir, after reclaiming this area, now is coming back down. There is definitely some rotation out of this asset into the rest of the assets, as we can see this week. Microsoft putting new highs, incredible performance, one of the best performing Magnificent 7 across the stocks this week. Meta is now facing weekly resistance. MicroStrategy, it's also in a bull flag just like Bitcoin and holding above the 21 weekly. The target of the flag is 546 if it manages to succeed. GME continues trading sideways after a rejection of this revenge rally, coming back and putting equal lows, defending the 41 RSI. Robinhood, we call for a move into revenge bullish rally. I will say that is now completed. It's extremely overextended in my opinion and starting to lose volume as it runs up. We should be expecting a little bit of rollover in this area. I wouldn't be surprised. All coins are perfectly bouncing off the top of this range on the USD dominance versus total free, which is a relief because exiting from here is a bear market. So as long as we remain here, that is still good. Bitcoin dominance is perfectly bouncing from my resistance at 71.81. You can see it right there. Let me magnify it. Almost there to hit my resistance, pretty much millimeters away. USD dominance still following my fractal on the way down. That should help the altcoins to perform if it continues in that direction. Let's start with the ratios. We are going to start with the VIX, Bitcoin divided by VIX. Where are we? And we're going to always, when we do this analysis, refer to what happened in the previous cycle. When we started being in declining momentum, lower lows on the RSI, bearish divergences into the bear market, that journey when you are still in a bull market, but you are already entering bear market of momentum, which always precedes price, you can see you hit it first here, and then a third time, then a fourth time, and then you reach the bottom of the bear market. So where are we with that? If we compare these two pictures, we have done 1, 2, and we could do the third one there against the VIX. If we do that, the upside is more or less to get into this area in there. Of course, this is very confusing. There's no way, we can calculate this number and translate it into Bitcoin price. All we can do is follow with these charts and see when we are at that resistance and sound the red bell alarm. And we are at 57.62 and we need to get into 59.70. So that's less than 2 points away to hit a local top according to this ratio. Once we hit that, we should see a retracement and then another attempt. Each one of these attempts can either put a new all-time high or it can put a lower high, like this one that I think is part of the 48 last move before entering into the bear market in 2022. Next ratio, keep in mind this one is saying resistance is closer, but we can go slightly higher. Gold on the weekly, rejecting that level at the moment and trying a second time to re-enter. So it's saying that against gold, Bitcoin has performed really well in the ratio, trying to reclaim that line, but historically speaking, we should see a rejection from there. And that means that either gold starts pumping or Bitcoin starts coming down, or both. If we look just at Bitcoin against gold on the monthly and we compare the previous cycle, notice that the previous two cycles we never did that. We just entered in a bear market straight away against gold. But the previous cycle in 2021, after we lost that support, we started trying to re-enter desperately when we were at 69. But eventually gold and Bitcoin shake hands and they say, okay, let's go into the bear market. Finally, let's agree on that. And we did it twice. First attempt, second attempt. And in this cycle, 1 month we closing here, second month we are closing a little bit closer to that resistance of 61. In the price, that is shown as that immediate resistance is getting closer. I would say probably is around 120 for a first hit there. If we get a second hit, like this one corresponds with this, and then the second hit actually gives a lot of additional move to the upside. So getting 2 hits is a thing. If we get just one and we get to 120 and then we go into bear market, that will be pretty disappointing. Of course, if we hit it one and we get a rejection from 120, we spend a couple of months and then we try again in October, November, then we can get a more impressive move up into 140, 150 before we give as well the kiss goodbye and enter bear market. Of course, you can always argue that past performance is not indicative and that we can do something completely different this time and completely smash gold and put a new high of momentum and get into the top of the range in here, which is something that we didn't do this cycle. So fair enough. If we get into 81 in here, be my guest, because that's probably gonna be like around a 300k Bitcoin. So if you subscribe to that, good for you. I don't, but we can still be friends. Against the NASDAQ, very interesting one, because instead of hitting the global rejection in here at 69, like we will have done in 2022 when we were at 48k before entering bear market, in this case, we hit hit the ascending trend line, and we got still a rejection with a higher low. So we kind of have pending in here for NASDAQ to go and hit this like we did in there. So maybe we are reserving that for August or September if we are speculating the right thing. So are we overextended against the NASDAQ? No, we are not. NASDAQ has been performing really great. Bitcoin is below the all-time high. NASDAQ is on an all-time high. So there should be, what this ratio is saying, a rotation, and eventually we get our third touch like we did in here. But notice we did this in March 2022, so we are well ahead. Even if we do it in August, that's a little bit too early. This should be happening if we did it in the same timing as 2022. We should be doing it in March 2026. Next ratio is DXY, which is already very close to hit resistance again. So this one is saying not much upside left. And the last one is against the Federal Reserve balance sheet. This is already touching the resistance. And this is going against the previous cycle because we did 1, 2, and 3. In this case, we did 1, 2, and the third we didn't get it. We actually entered straight into bear market. So every cycle is slightly different, but they all rhyme in multiple things when you do the average of all the ratios, if you want. Final conclusion around the ratios with a view in the longer term, medium term, I will say that we are getting very close to an intense resistance, and I see that coming at around 115 to 125k maximum. I wouldn't expect that we break these ratios, but by completely breaking out at this time in the cycle from this heavy resistance that we have never done in previous cycles. Well, that is just past performance, and I'm more than happy to be completely wrong. Thanks so much for watching. Remember, if you consider yourself part of the Parrot army, to always hit the like and write down a comment down below, not just on these videos, but on all the videos of the week. I still think, how am I gonna compensate that? I really wanna form some sort of Parrot army so that you all end up with a massive smile. Thanks so much for watching. I'll see you in the next one. Bye bye.